Hello, everybody. It's Sunday, October 9th, and we are heading into the start of earnings. We've got a pretty big week. We've got PPI on Wednesday, and then we've got CPI on Thursday. Now, this is reversed, which normally does not happen, where PPI usually comes out after CPI. And if PPI is bad, CPI 98% of the time is going to be bad as well. So we're going to get a little bit of a preemptive move come Wednesday when we get the PPI data come out. We've got earnings that are starting on Friday. We've got JP Morgan, Credit Suisse is going to be reporting this week as far as I recall. I'll give a quick look here. No, on Friday, we've got JP Morgan, Wells Fargo, Morgan Stanley, Citigroup. On Thursday, I do not believe we have any. Okay, yeah, we've got Bank of America and Charles Schwab. Those are your main ones. Those are before the open, after the market close. Nothing really substantial on Thursday. Oh, sorry, that's on the 17th. Thursday, after the market close. Okay, we've got CMC. Yeah, Domino's Pizza. Again, not to distract you and start going off on a tangent here. Uh, Big picture, we have closed below the bear market line now 13 sessions in a row, if I recall. Going back from September 22, we're here on October 7th. This is the longest streak that we've had, dating back, back in June when we first broke down below it, without a little bit of a breather and a close back above that 38.55 level. So, there's obviously a lot of pressure that's taking place here for upside bounces to be sold off, but at the same time, we are starting to get a little bit stagnant, and we are starting to hit some seasonality periods now where we're due to start breaking into another one of those large rallies like we had back in March, which again projects out to what I had shared you last week with the two different wide view alternatives as to where we're heading. Fractionally lower, which I'll show you in a minute, or if we've already hit our lows and now we are waiting for something to trigger us so that we get that massive move back up to the upside. Again, we're here, quite a large number of closes down below 20% year over year. We've not been minus 20% year over year as of yet. We are getting very close to the COVID 50% retracement, which I'll show you in a minute as well. And, obviously, because we did open the week with a gap down on, or with that small gap up on Monday, 3609, we're actually up for the month of October, even though we did have that big sell down. We're only up 30 points last week, but again, this is in a very specific area where we're at right here, right around that uh, Biden presidential win level, and again, this is what we're working with, and I'll bring you into why I want to simplify this really quick. Is since I decided to enforce, you know, forgetting about this all trying to hit home runs in this high VIX, high inflated volatility area, um, with the calls and puts options pricing, just go on with this SPX spread. You don't have to do anything. You don't care what the futures do. You don't care what happens in Europe. You don't care. All you care about is where's the opening bell. And even though, I'll put it here, even though we took heat over here on Friday, which I mark in red anytime that we take heat, the put spread still paid. I got a great opportunity to speak with one of our newer members, Coca Cola, this weekend. Fantastic individual. I wish everybody had their heads screwed on as well as he does when it comes to both life and the approach to trading. Anyone with an opportunity in the San Antonio area to have a meetup with him, I would recommend it to the highest level. Stand up guy. I wish I was living over there in San Antonio or even in the US. I would fly over there and literally go and spend a weekend with you, because I think you and Spicy Trader, two guys that I've had a great opportunity to speak with multiple times with Spicy, I, I would love to sit there and just soak up the information that you guys have so that I could better what I try and offer to everybody else. But anyway, again, took a little bit of heat over here on the spread, still wound up paying. Coca Cola got a $4 credit because he came in late in the afternoon. And then again, still, because we closed there at 36.39, it was only $34 that got charged back on the credit that you took, even if you took it earlier in the day at $1.20, $1.15, $1.50. So you're still getting that 5% that we're looking for. But yeah, quick, nothing really to go over here, other than the fact that we're right at a major mark point for where we're at on the markets here. And again, we get that positive data that we would be hoping for prior to the start of earnings, where everybody's forecasts are significantly lower, which makes it much easier for everybody to beat. If you remember 2016 and 2017, this right here, this 3620, 3582, right in this zone. If we do break down, we're looking at that 3505 area, but we're coming right here over to the September highs and the October highs from back in 2020, prior to when Biden won. And then obviously we've got all of that run coming up from it. Now, again, just to point out, which is a personal thing, it's got nothing to do with the markets, just something I've observed. But if you look over here, okay, here is November 10th and November 12th of 2020. The lows were 35.1858 and 35.1191. So 35.1191 is the number that I'm most significantly looking at, right? So call it 35.12, and that 35.05 is the 50 retracement from COVID. Even though Obama inherited the bear market when he was elected, and the markets were obviously heading lower. Okay, put a little asterisk next to that. There is not a president in our period who has lost his lows since he took office. Or, sorry, since he won the election. Not since he took office. Since he won the election, there is not one president who has lost his lows. Biden right there, 35.11, right down there below there, 35.05. Again, I'm not being political about this. I think Joe Biden is a complete muppet. I can already see that we're going to be getting Donald Trump in 2024. Like it or not, that's just the way that everything is set up, and then you're going to have a massive rally coming off of that. We are at a very critical juncture, not for anything that has to do with what you can touch, feel, or smell, or taste, listen to, anything like that. This is the algorithm of these massive supercomputers that trade against each other on a constant basis, where individuals like ourselves come into and try and take advantage of what these supercomputers are doing, the video game that this stock market is. We are right at that area, right at it. And, again, we've got a nice positive sign here on the RSI on the daily. Come over here onto the 4 hour, and we've got a nice little setup as well on the 4 hour chart for where we are as far as being A, oversold, but also B, having a little bit of a positive sign as to what we had going on there when we hit that bottom, when we bottomed out over here in September. And then we had that sell divergence and put in that low, which is why we got that nice little pop that we had going into last week. 38, 38, 38, 46, 38, 55. That's the levels that we're looking at. We're looking at that zone right there. Something to get up into this 38.40, 38.50, 38.60 zone, and then we can start to see whether or not we are in fact into the starting point of the Santa Claus rally, the midterm election rally, the seasonal rally that we get consistently as we get through that September October period. So, again, the data that we're going to have coming up this week, it is going to be crucial to that as to whether or not we can start to move up there or we get a fractionally lower low right down maybe around 50 to 80 points lower than where we're at right now, and then we start to take off. This is from a price point of view. From an Elliott Wave point of view, this thing's a complete mess. So, we're strictly looking at this from where we are as far as price goes. And again, it looks very, very much as if we're right at that very bottom crucial level, and we can start to move on to the upside. On that note, finishing off, keeping this very simple and very quick, on Friday, I got back into the December 16th SPY 390 calls. As you remember, I was touting these quite a bit. Uh, I was in around $9 prior to hitting the lows there that we had at the end of September. I did not add any on Monday morning last week when it was down here below 6. Ran up here to 12. I got out at around 11:50, as you remember, 11:30 ish. Massive drop down here on Friday. I started buying back in right around $7. And again, December 16th, 390s. The high last week, I'll go back here and pull that up. SPY last week, again, because I'm working with my numbers here, 5 day, yeah, 380 was your high last week. So again, you know, as the expectation appears to be looking for a move back up to that 384, 385 level, retest this 380 zone and break through it. I like these December 16th 390 calls, and that was why I still think that that's the only thing that anybody should really be looking at to trade, considering where we are as far as volatility goes. As well, I got into some of the 400 calls. Uh, didn't have these prior, but because I made money on the 390 calls, I decided to use that profit and go into the 400 calls, understanding that I'd like one of them to be a runner because I am looking for 420, 430 possibly as we go into Thanksgiving and Christmas. Very optimistic. I understand that, but that's what I am looking for with this big B wave and the seasonality of it, considering the way that March was. Again, these were down here below $4. I was posting it in the alert room. You had a high of $8 last week. So, again, this is a great low stress exposure for that upside movement. And it's what I would be focused on if I needed to only be in calls and puts and I wasn't able to be in the SPX spreads that we're posting out daily, that are paying daily. And everybody who started 8 days ago has seen an 8 day win streak, 9 day win streak, whatever it is, and they're all up more than double than what they started with. So everybody that was doing one contract can now be doing two contracts. And again, I stress it and stress it and stress it and stress it and can't stop stressing it. We're looking at $1,000 worth of risk. 5% is all that we're targeting for, $50, which is why I'm saying your spread that you're looking for has to be around 60 cents so that you're at least getting $60 to cover your commissions both ways, in and out. So that $50, you get through trade number 20, you're up over $1,000, taking just $50 a day. Everybody was making a lot more than $50 a day in the course of these 9 days, and I've got guys that are already going on 3 contracts, even though we've made it so quickly because we have been getting very good payouts. Some people are struggling and they're wanting to know what's going on over here, what's going on over there, what's going on with this, what's going on with that, and they're wanting to trade multiple items. Again, focus down on your one bread moneymaker and just let it be the one that provides you with your income. And if you are bored or you do see a very good opportunity on something, yeah, you can go around and look at other things. I'm not telling you what to do. I'm not telling you what position to be in when you're in bed at night. I'm not telling you whether or not to buy one of those squatter potties to put your feet on when you take a dump. I'm telling you what I've been doing for 27 years. And that's the reason why I run a management fund that has got over $14 million with only 8 people. So, you know, again, do what you're going to do and let it just work the way that it does. I mean, last year we paid out 8 million. 8 million is what I had to pay out to my clients, and again, we're still trading here with nothing but profits. So do what you got to do. Have a great Sunday. Enjoy yourselves. I know there's a lot of headlines out there that are freaking people out, but as of right now, with futures, I'm not really seeing much with futures. We had that little bit of a dip. We're holding the bottoms right now. Very, very oversold. What we'd like to see is some movement back up to that 3668 over here on the ES. The NASDAQ, very, very critical where we're at right here, down here at 11,000. We definitely want to see this pushing back up to 11,200. But, again, we're in that wipeout spot. And, we'll see where we start heading into as we get closer to the morning. I hope you guys all have a fantastic Sunday night, and I will see you in the chat.